Hello, my dear students. A very warm welcome to all of you in Shri Jayendra Rank Zone. I am your friend and mentor for the subject Business Economics. In this lecture, we'll continue with Chapter 3, that is Theory of Production and Cost. And in particular, we'll begin with the multiple choice questions, that is MCQs. So let us start. This is lecture number 10, and we are going to discuss multiple choice questions of the chapter, that is Theory of Demand and Supply. Let's see the first MCQ. Which of the following is considered production in economics? Which of the following is considered production in economics? A. Tilling of soil. B. Singing a song before friends. C. Preventing a child from falling into a manhole on the road. D. Painting a picture for pleasure. Over here, the answer is A. Tilling of soil, because the man is actually working and doing something. Singing of song for before friends is for the personal satisfaction. It is for the personal satisfaction. Preventing a child to fall in the manhole will also give you a social satisfaction. Painting a picture for pleasure, basically you are not earning money out of it, but tilling of soil is actually known as production in economics. Let us see question number 2. Identify the correct statement. A. The average product is at its maximum when marginal product is equal to average product. AP is maximum when MP is equal to AP. B. The law of increasing returns to scale relates to the effects to changes in factors production proportion. C. Economies of scale arise only because of individualities of factor proportions. And D. Internal economies of scale can accrue when industry expand beyond optimum. So over here, the correct statement is A. That is, the AP is at maximum, the average product is at maximum when marginal product is equal to average product. When marginal product is equal to average product. Students, you can see it over here. This is the average product. This is the average product. This is marginal product. So average product is at the maximum when MP equals to AP and MP cuts AP from above. MP cuts AP from above. I believe you understood this. Let us continue. Question number 3. Which of the following is not a characteristics of land? A. Its supply for economy is limited. Yes, it is the characteristics of land. It is immobile. Yes, it is the characteristics of land. Its usefulness depends upon human efforts, obviously, because if you won't be doing anything, the land would not produce anything. And D. It is produced for our forefathers. Not a characteristics of land. It is produced by our forefathers. So D is over here. The answer is D. Not a characteristics of land. Produced by our forefathers. Question number 4. Which of the following statements is true? A. Accumulation of capital depends solely on income of individuals. B. Savings can be influenced by government policies. C. External economies go with size and internal economies with location. Or D. The supply curve of labor is an upward sloping curve. Statement is true. B. Saving can be influenced by government policies. So government gives several incentives to save, can give tax reduction, incentives in terms of taxes, etc. Fifth, in the production of wheat, all the following are variable factors that are used by the farmer except A. The seed and fertilizer used when the crop is planted, the field that has been cleared of trees in which the crop is planted, the factor used by the farmer, the tractor used by the farmer in planting and cultivating not only wheat but also corn and barley. D. The number of hours that the farmer spends in cultivating the wheat fields. In the production of wheat, of all the following are variable factors that are used by farmer except. So what is not the variable factor? The field that has been cleared of trees in which the crop is planted. This is not a variable factor, this is a fixed factor. Fixed factor of production. You can't increase it. Question 6. The marginal product of a variable input is best described as A. Total product divided by the number of units of variable factors. B. The additional output resulting from one more unit increase in the variable input. C. The additional output resulting from one more unit increase in both the variable and fixed factor. Or D. The ratio of amount of variable input that is being used to the amount of fixed input that is being used. The marginal product of a variable input is best described as B, that is the additional output resulting from one more unit increase in the variable input. Seventh, diminishing marginal returns implies decreasing average variable cost, decreasing marginal cost, C, increasing marginal cost, or D, decreasing average fixed cost. Diminishing marginal return is decreasing. That means what? C, increasing marginal cost. Cost is increasing and that is why the marginal returns is decreasing or diminishing. Question number 8. In the short run, as economists use the phrase, is characterized by A. At least one fixed factor of production and firm neither leaving nor entering the industry. B. Generally a period which is shorter than 1 year. C. All factors of production are fixed and no variable inputs. Or D. All inputs are variable and production is done in less than 1 year. Over here, the answer is A. At least one fixed factor of production and firm neither leaving nor entering in any industry. This is the characteristics of short run. In the long run, all the factors are variable and firm can enter into any new industry. It is possible, but in short run, this facility is not possible. This can't be done. Let's see question number 9. The marginal average and total product curves encountered by the firm producing in the short run exhibits all the following relationship except, that means this relationship is not possible. When total product is rising, average and marginal product may be either rising or falling. Yes, it is possible. When marginal product is negative, total product and average product is falling. See, when marginal product is negative, total product is falling, it is true. And average product is also falling, it is also true. C. The average product is at maximum, marginal product equals to average product and total product is rising. And D. When marginal product is maximum, average product equals marginal product. No. When average product is maximum, marginal product and average product is same. So this is not correct. The answer is D. Let's move ahead. Question number 10. In two economists, the main difference between short run and long run is that A. In the short run, all inputs are fixed, while in the long run, all inputs are variable. See, in the short run, all inputs are not fixed. One input is fixed and you can improve the labor in the short run. So variable inputs are there. So this is wrong. In the short run, the firms varies all the inputs to find least cost combination of inputs. See, in the short run, at least one of the firm's input level is fixed. Correct? And in the long run, the firm is making a constant decision about how to use existing plant and equipment efficiently. So the answer is C. So the answer is C. Let's do 11th. Which of the following is best definition of production function? A. The relationship between market price and quantity supplied. B. The relationship between the firm's total revenue and cost of production. C. The relationship between quantities of output needed to produce a given level of output. Or D. The relationship between quantity of inputs and firm's marginal cost of production. Best definition of production function. C. The relationship between quantities of inputs needed to produce a given level of output. It is the best definition of production function. Question number 12. The law of diminishing returns applies to short run but not in long run but not in short run, both in short run and long run, and neither in short run and long run. A. Short run but not in long run. In long run, returns to scale applies. Okay, so the answer is A, 12A. Let's see the 13th one. Diminishing returns occur A. When units of variable inputs are added to fixed input and total product falls. B. When inputs of variable inputs are added to a fixed input and marginal product falls. C. When the size of plant is increased in the long run. Or D. When the quantity of fixed input is increased and returns of the variable input falls. Use the following information to answer question 14 and 16. Okay, fine, we'll do it later on. But diminishing returns occurs because of B. When inputs of variable, when units of variable inputs are added to the fixed input and marginal product falls, this is diminishing returns. The inputs, the fixed input is fixed, but the units of variable inputs is added to the fixed factor or fixed input, and because of that the marginal product falls, that is diminishing returns. Now see the data. Hours of labor 0, 1, 2, 3. Total output, marginal product. Question 14. What is the total output when 2 hours of labor is employed? A. 80, B. 100, C. 180, D. 200. So it would be 100 plus 80 equal to 180 equals to 180, and the answer is C. 14C. Let's see the 15th. What is the marginal product of the third hour of labor? Marginal product of third hour of labor. A. 60, B. 80, C. 100, D. 240. So it would be 240 minus 180 equal to 60. So the answer is A. 15A, 60. Question number 16 now. What is the average product of the first 3 hours of labor? Average product of first 3 hours of labor. A. 60, B. 80, C. 100, D. 240. So the total output is 240. The number of hours is 3 hours of labor, so it would be 80. The answer is B. The answer is B, 16B. Let us see question number 17 now. Which cost increases continuously with the increase in production? Which cost increases continuously with the increase in production? A. Average cost, B. Marginal cost, C. Fixed cost, or D. Variable cost. It is obviously but D. Variable cost. Variable cost is directly proportional to production. Variable cost is directly proportional to production or output. That means what? If output increases, the variable product increases, the variable cost increases, and if the output decreases, the variable cost decreases. Fixed cost is fixed up to a certain limit. Question 18. Which of the following cost curves is never U-shaped? Is never U-shaped? A. Average cost curve, marginal cost curve, average variable cost curve, or average fixed cost curve. It is obviously but D. Average fixed cost curve. This is never U-shaped. It is fixed cost curve, so how could it be U-shaped? It is never U-shaped. Question number 19. Total cost in the short run is classified into fixed cost and variable cost. Which one is the following is a variable cost? Cost of raw material, cost of equipment, interest payment on past borrowings and payment of rent on building? The answer is cost of raw material is variable. Cost of raw material is variable. Equipment is also fixed. Past borrowing payment is there, so interest is fixed. Payment of rent on building is also fixed. Question 20. In the short run, when the output of a firm increases, the average fixed cost is A. Increases, B. Decreases, C. Remains constant, or D. First declines and then rises. In the short run, when the output of a firm increases, the average fixed cost will decrease. See, fixed cost is same, output is increasing, so average fixed cost is falling. So B, decrease. 20B. Question number 21. Which of the following is also known as planning curve? A. Long run average cost curve. B. Short run average cost curve. C. Average variable cost curve. Or D. Average total cost curve. It is LAC curve. That is A. 21A. Long run average cost curve. It is LAC curve. Let's shift to question number 22. If a firm moves from one point on a production isoquant to another, which of the following will not happen? Which of the following will not happen? A. A change in the ratio in which input are combined to produce output. B. A change in the ratio of marginal product of the inputs. C. A change in the marginal rate of technical substitution. Or D. A change in the level of output. It would be obviously D. A change in the level of output. Just read the question again. This will not happen. A firm moves from one point on production isoquant to another. Which of the following will not happen? A change in the level of output. The level of output on the production isoquant is same whether you reach to any point, because any combination will give the same level of output. So there would be no change in the level of output. Any point on the isoquant will give same level of output. Question number 23. With which of the following is the concept of marginal cost closely related? A. Variable cost. B. Fixed cost. C. Opportunity cost. D. Economic cost. Which of the following is the concept of marginal cost? Changes. A. Variable cost, because variable cost changes. Question 24. Which of the following statement is correct? A. When average cost is rising, the marginal cost must also be rising. B. When average cost is rising, the marginal cost is falling. C. When average cost is rising, the marginal cost is above the average cost. Okay. Or D. When the average cost is falling, marginal cost must be rising. It would be C. When average cost is rising, the marginal cost is above the average cost. We have seen this relationship before. So it is 24C. Question number 25. Which of the following is an example of explicit cost? Explicit cost. The wages, A. The wages a proprietor could have made by working as an employee of a large firm. B. The income that could have been earned in alternative uses by the resources owned by the firm. C. The payment of wages by the firm. Or D. The normal profit earned by the firm. It would be C. The payment of wages by the firm, because payment is made by the firm to the outsiders, that is employees or laborers. So it is an explicit cost. Next, 26. Which of the following is an example of implicit cost? Implicit cost, internal cost. A. Interest that could have been earned on retaining earnings used by the firm to finance expansion. B. The payment of rent by the firm for the building in which it is housed. C. The interest payment made by the firm for funds borrowed from a bank. Or D. The payment of wages by the firm. It could be A. Interest that could have been earned on retained profits, retained earning used by the firm to finance expansion, because the firm has not taken loan from outside, because the firm had not taken loan from outside. So this leads to saving of interest, and this is an implicit cost. If the firm must have not taken the retained profits, in that case we must have earned by investing retained profits in some other project or any venture. Use the following data to answer question 27, 28 and 29. Output 0, 1, 2, 3, 4, 5, 6. Total cost is 240, 330, 410, 480, 540, 610 and 690. The average fixed cost AFC of 2 units of output is average fixed cost. The definition of average fixed cost is total fixed cost divided by output. Total fixed cost divided by output. Students, in this question, the total fixed cost is 240 because the output is 0, and this total cost consists of 0 variable cost and 240 is the total fixed cost over here. So we can say that total fixed cost is 240, quantity is 2, the output is 2, so answer is 120. 27C, 120. Let's see question number 28. The marginal cost of 6th unit of output is, so it would be 690 minus 610, so 80. How we did it? MCN minus MCN minus 1. So TCN equal to MCN minus 1. So TC6 equal to MC6 minus MC5. So it would be I'll rewrite the formula. MCN equal to TCN minus TCN minus 1. Over here we need to find out MC6. So it would be TC6 minus TC6 minus 1, that is 5. So 690 minus 610 equal to 80. So the answer is C, 80. 28C, 80. Let's see 29th now. Diminishing marginal returns start to occur between units. Diminishing marginal returns start to occur between units A, 2 and 3, B, 3 and 4, C, 4 and 5, or D, 5 and 6. Just check 2 and 3, 3 and 4. So it is 480, 540, 4 and 5, 540 and 610. Over here the difference is between 3 and 4, the difference is 540 minus 480 is 60, 540 minus 610 is 70, 610 and 690 is 80. Question number 29. Diminishing marginal return starts to occur between the units. So I believe you must have seen this. So it is 4 and 5. Marginal cost is defined as, question 30, marginal cost is defined as the change in the total cost due to 1 unit change of output. Okay, yes. B, total cost divided by output. No. Total cost divided by output is average cost. C, the change in the output due to 1 unit of change in the input. And D, total product divided by the quantity of input. So the answer is A, that is the change in the total cost due to 1 unit change in output. 30th A. Let's do question number 31. Which of the following is true of the relationship between the marginal cost function and the average cost function? Which of the following is true of the relationship between the marginal cost function and the average cost function? A, if MC is greater than ATC, average total cost, then average total cost is falling. B, the average total cost curve intersects the marginal cost curve at the minimum of marginal cost curve. The MC curve intersects the average total cost curve at minimum ATC. And D, if MC is less than ATC, then ATC is increasing. So students, over here the answer is C, the MC curve intersects the ATC curve at minimum ATC. You can see this diagram. This is the average total cost curve. This is the marginal cost curve. The marginal cost curve is cutting the average total cost curve from below, and the average total cost curve is at the lowest, is at the minimum when MC is cutting the ATC. Just see this diagram properly and try to understand this. Okay, we are moving ahead now. Question number 32. Which of the following statements is true of the relationship among the average cost function? Which of the relationship is true? A. Average total cost equal to average fixed cost minus average variable cost. Not possible. B. Average variable cost equal to average fixed cost plus total cost. Not possible. Average fixed cost equal to total plus variable. That is average total cost plus average variable cost. The equation is faulty. Or D. Average fixed cost equal to average total cost minus average variable cost. So the answer is 32D. Students, you know average total cost is equal to average fixed cost plus average variable cost. So we can say that average fixed cost equal to average total cost minus average variable cost, or we can say that average variable cost equal to average total cost minus average fixed cost. We can use any of the equations from this. Is it clear? Let's move ahead now. Question number 33. Which of the following is not a determinant of the form of cost function? A. The production function. B. The price of labor. C. Taxes. Or D. The price of firm's output. Which of the following is not a determinant of the firm's cost function? Cost function. It would be D. The price of firm's output. See, labor will definitely constitute the cost. Production function will definitely constitute the cost. Taxes is also involved in constituting the cost. But the final price of the product is not constituting the cost. Yes, cost could affect the price. It could happen. I believe you understood. Let us continue with question number 34 now. Which of the following statement is correct concerning the relationship among the firm's cost function? Which of the following statement is correct concerning the relationship among the firm's cost functions? A. Total cost equal to total fixed cost minus total variable cost. It is saying that total cost equal to fixed minus variable. How is it possible? It is not possible at all. Total variable cost equal to total fixed cost minus total cost. It is also not possible. C. Total fixed cost equal to total cost minus total variable cost. Yes. And D. Total cost equal to TVC minus TFC. Not possible. So the answer is C. Total fixed cost equal to total cost minus total variable cost, or total variable cost equal to total cost minus total fixed cost, or total cost equal to total fixed cost plus total variable cost. Let's see question number 35. Suppose output increases in short run. Suppose output increases in short run, total cost will A. Increase due to increase in fixed cost only. B. Increase due to increase in variable cost only. C. Increase due to increase in both fixed and variable cost. Or D. Decrease if the firm is in the region of diminishing returns. So it would be B. Increase due to increase in the variable cost, because fixed cost is absolutely fixed. We are adding variable factor of production. Variable factor of production in the short run. Fixed factor of production cannot be improved or increased. So variable factor of production will constitute what? Variable cost. So the answer is B. 35B. Let's see question number 36. Which of the following statements concerning the long run average cost curve is false? A. It represents the least cost input combination for producing each level of output. B. It is derived from a series of short-run average cost curve. C. The short-run cost curve at the minimum point of long-run average cost curve represent the least cost plant size for all levels of output. Or D. As output increases, the amount of capital employed by the firm increases along the curve. 36. It would be C. The short run cost curve at a minimum point of long run average cost curve represent the least cost plant size for all the levels of output. Which of the following statements in the long run cost curve is false? So this is not correct at all. Just read the B again. It is derived from the series of short run cost curve. Yes. A. It represents from least cost input combination of producing each level of output. Yes. And so on. 37. Question number 37. The negatively sloped, that is falling part of the long run average total cost curve is due to which of the following? A. Diseconomies of scale. B. Diminishing return. C. The difficulties encountered in coordinating the many activities of large firm. Or D. The increase in productivity that results from specialization. Obviously it is D. The increase in productivity that results from specialization. 38. The positively sloped, that is rising part of the long run average cost curve, average total cost curve, is due to which of the following? A. Diseconomies of scale. B. Increasing returns. C. The firm being able to take the advantage of large scale production technique as it expands its output. Or D. The increase in productivity that results from specialization. Positively sloped or rising due to diseconomies of scale. Part of the long run average total cost curve is due to which of the following? Diseconomies of scale. 39. A firm average total cost is 300 at 5 units and 320. Average total cost is 320 at 6 units. The marginal cost of producing 6th unit will be A. 20, B. 120, C. 320, D. 420. D. 420. We are doing question 39. Just see it properly. So students, the answer is 420. I'll tell you how. See over here, 300 units are the average total cost of 300 units. So we will calculate the total cost. Average is 300, the quantity is 5. Total cost is 500. In second situation, the average total cost is 320 multiplied by 6. This will give you 1920. This is the total cost. The difference between these two, that is 6 minus 5, 1920 minus 1500 is 420, and this is the marginal cost. Marginal cost of producing an additional unit, that is 6th unit. I believe you understood. Let us see question number 40 now. A firm producing 7 units of output has an average total cost of 150 and has to pay 350 to its fixed factor. Fixed cost 350. Whether it produces or not. Fine. How much the average total cost is made up? The variable cost. A 200, B 50, C 300 or D 100? Just see it over here. If I calculate total cost, this will be 150 multiplied by 7 equal to 1050. Now from this 1050, the fixed cost consists of 350. If you deduct, you will get a figure of 700. This is variable cost. Now we have to calculate average total cost made up of variable cost. So average is calculated dividing by 7. We'll get what? 100. So the answer is D. 40D. 100. Let's see question number 41. Question number 41. A firm has a variable cost of 1000 at 5 units of output. If fixed cost is 400, what will be the average total cost of 5 units of output? A 280, B 60, C 120, D 1400. So students, over here the variable cost is 1000, the fixed cost is 400, so total cost is 1400. If we calculate the average total cost, that would be total cost divided by output. So 1400 divided by 5 units will give us 280. The answer is A, 41A 280. 41A 280. Let's go to question number 42 now. A firm average fixed cost is 20 at 6 unit of output. What will be at 4 unit of output? The average fixed cost at 4 unit of output. As you can see, average fixed cost is 20 at 6 unit of output. So this will give you 120, that is total cost. AFC multiplied by quantity will give you average total cost. Now over here, in this situation, at 4 unit of output, the total would be 120. So 120 divided by 4 will give you answer B, that is 30 unit. 120 divided by 4 unit equal to average fixed cost, that is 30 units, rupees 30. So 42B would be the average fixed cost. Let's go to question number 43 now. Which of the following statement is true? The services of doctor are considered production. Man can create matter. B. Man can create matter. C. The services of a housewife are considered production. Or D. When a man creates a table, he creates matter. Over here, the answer is A. That means the services of doctor is called production. Production of what? Production of services. Because he is giving treatment to the patients. So 43A. Question number 44. Which of the following is a function of an entrepreneur? A. Initiating a business enterprise. B. Risk bearing. C. Innovating. Or D. All of the above. My dear students, over here all the functions are functions of an entrepreneur. So the answer is D. All of the above. So over here 44th, the answer is D. All of the above. Let's see question number 45. In describing a given production technology, the short run is best described as lasting. Short run. A. Up to 6 months from now. B. Up to 5 years from now. C. As long as all the inputs are fixed. Or D. As long as least one input is fixed. So short run, as long as least one input is fixed and other input is variable. And other inputs are variable. I believe you understood. I believe you understood till here. We are concluding this class till here only. We'll continue in the next class now. Thank you.